Everybody in? Ready to go? Ni hao, good afternoon. My name is Breffney Kennedy. I'm based in Shanghai. I cover the Asia market. But for the purpose of this afternoon, I'm going to focus on China. I'm happy to talk about other markets in Asia, either in one-to-one meetings or if on email or phone afterwards. I head back tomorrow morning. But I've been asked to keep this pretty tight because you're probably hungry, you probably want lunch. So I think that was a test to see who was really committed to the China market, to be honest. So this is China, big country, big GDP. You know, it's the second largest economy in the world as of last year. And in terms of the pace of the growth, it will be the largest economy in the world sometime between 2020 and 2030. And this is all happening now, as of today, just 10 years after the signed WTO, and only 30 years after opening up around 1978, 1979. It's a very significant pace of growth in China. So when you link pace and scale, that becomes quite exciting to everybody. So GDP, quite sizable there. Population, about 20% of the world. Becoming increasingly urbanized. So McKinsey are saying by about 2020, 2025, about 920 million people will live in China's urban cities. So there are 620 million now. That's where the middle class is coming out of, this process of urbanization, which has been fed by the factory production and the economic growth. Food spend in urban areas, which is where our customer base is, based on the fact that that's the middle class, is about 32% of the household spend, quite high. That'd be both retail and food service. And for Ireland, it's our largest Asia market. We grew about 12% last year. We should see further growth this year to hit about 150 million euros this year, I'd expect. So what are some of the key facts around the Chinese retail market? So again, you're looking at euro value of about 59 billion euros worth of a market. Growth in 2010 about 10.4% versus 2009. This year you'll probably see another 16% on top of that in terms of retail sales. As I mentioned, urbanization is key to the retail sector. And as an example, what we're finding is that the international retailers, such as Tesco, Carrefour, Walmart, their presence to date would be primarily along an east coast region of 9 provinces, right by the sea line. If you look at Chinese map, go right down the coast and you've got about 9 provinces there. And that's where most of the retailers would have entered into China. And that has accounted for 54% of Chinese GDP. So a significant area. What's happening now is the government policy is to push wealth and economic growth inwards to central and western China. The international retailers are following that, and you're seeing more growth in what we call tier 2, tier 3, tier 4 cities. So getting down from like 20 million people to 10 million people to 5 million people to 1 million people cities. So the likes of the retailers and Starbucks are beginning to invest in those areas. So you're seeing this regional expansion. Another interesting development is convenience stores, and I have some stats on store numbers for different chains. So likes of Family Mart, Lawson, these kind of Japanese or Taiwanese owned brands of convenience stores are growing significantly. Now they're still very much focused on East Coast, so Shanghai, Guangzhou, Dalian, these kind of cities. And then like I said, the big three, actually in the context of overall store numbers within the market, are quite small, and we'll see this later on. Private label is an interesting thing. It's probably not an area most Irish companies entering China will want to go down the route of, but we are seeing the initial signs of private label grow its shelf space in terms of the number of products. Tesco, Carrefour and Metro are the guys that are driving this, and some of the Chinese retailers are beginning to take that on board and move a bit from brands into private label. One of the challenges we're going to see within that kind of how that will play out in the market is Chinese manufacturers are very used to very significant margins in supplying their branded product into retailers. And I heard one particular very strong poultry company talking openly about this within a breakout session of a conference and quoting very high figures where customers or competitors would have been around. So no sense of, that this wasn't something to kind of share with people. So once the retailers get stuck into the private label, and we all know the benefits that the retailers secure out of that in terms of specification control and costing and etc. That will start impacting the Chinese manufacturers' brand's position. And it might also, I suppose, how that would play out in imported product is maybe you'll have a bigger discrepancy between the premium and imported product versus the private label, or what you might do is see pressure coming to drag down prices that imported products that can secure. It could go one of two ways, I guess. So this is by numbers of stores rather than by turnover, because when you start looking at turnover figures for Chinese retailers, there's lots of zeros, and then you're converting from RMB to euros, and you don't get a very clear picture. So store presence, I suppose, gives us an idea on their actual spread around the country. So if I move over here, Lianhua, Chinese-owned company, state-owned company, as a background, about 5,000 stores across China. Hugely sized company. 3 different types of outlets. They've got the kind of a standard economy price-driven type outlet, kind of supermarket. They have a convenience store, and then they've now got hypermarkets called CenturyMart. And it's CenturyMart within their business that are most keen on importer products. So they're looking to premium food market type of product, and they're looking at developing direct relationships with importers or working it through their import base. But very small business still in terms of you go into the store and you've got a small little area with imported product, maybe like what we had in the UK for like Asian foods, or back in the mid-90s, it's a specific area that they give to the imported product. NGS stands for Non-Gongshang, and again it's another Chinese-owned business, again over 3,000 outlets. CR Vanguard would be overseas, a bit more premium, so brands like Olé and a number of other brands are a bit more premium than say Lianhua and NGS. And then you're moving into the convenience stores, so 7-Eleven, Family Mart, significant increase in numbers of stores, Woo-Mart, and then Walmart is the largest in terms of presence of overseas retailers, in terms of Western ones anyways. And that would be a mix between your standard Walmart supermarket and then the big Sam's Clubs outlets. So and then you go all the way down, you got Carrefour. Spar China is an interesting one. Who expects Spar to be out in China? They've got about, I think it's about 200 or 300 stores out there, and have approached the market in a very different way than the other international retailers. They've come in and set up partnerships with regional investors, and they've built their outlets through that way, and their brand is growing that way. I have a video which hopefully of a Spar outlet, about 1.5 minute video, which I'd like to show at the end, hopefully if we have time. So just to give you an idea then briefly on what's imported product within retail in China. The first thing to say, it is primarily driven by cookies and chocolates. If you're talking to a buyer about cookies and chocolates, he's interested. It's a lot of competition, but he has a product there, and the reason it's around gifting. If you have a retail product that isn't cookies or chocolates, you've got to think about how could that product be presented as a gift. And that could be packaging, or the labeling, or a story around it. Very, very important thing. So City Shop are import dedicated. 8 or 9 stores, 8 in Shanghai, 1 in Beijing. So all imported product, but small in terms of the number of stores. So, supplying a business with 8 or 9 stores. A lot of churn. They use food festivals a lot. Get a lot of government support for food festivals. People pump money into it. 6 months later, the products are all gone, and I'm down there. The chocolate I've been buying is gone, and got to go and buy a different type of chocolate. So it's a lot of churn. So it's a case of, with them, I suppose, I always push back to them. No, you tell me what products you're genuinely interested in that we can see some durability in, and then we'll back that with a food festival. I'm not going to start doing food festivals, throwing money at it, and seeing products dip off after 6 months. Tesco wouldn't be the strongest in terms of imported products, but they are making some strategical changes in terms of their investments and the type of outlets they'll have, and that will see them trade up on certain categories, and therefore they will have more imported product. And then Lianhua, again, chocolates and cookies, and I mentioned here about this premier food market idea, which they're trying to get consumers to trade up. So food service, you're looking at about $265 billion figure, and again, most of it in our urban areas. again, all sorts of nice foods like deep fried bees and crickets and maggots there. If you're ever over, you have to try them. And I suppose from an Irish perspective, in terms of importing foods, we're really looking at 5-star hotels, Western restaurants, potentially maybe merchandising around cafes in the bakery sector where there's a lot of strong growth. So some little snack products that you might get on beside a till there. And the bakery sector, then we're seeing potential in dairy ingredients, of course. KFC are the model for an international business entering China. They are the single most successful international business, particularly in food, but possibly arguably anywhere in China. They today have over 4,000 outlets in China, and it will become a market of over $1 billion in terms of profit. It will be KFC's most significant worldwide market, including America. Why is that? Chicken, not beef. Chinese people eat pork and chicken, so therefore they've got a benefit there in terms of their key protein that they're offering on their menu. A lot of the growth would have come kind of back end of the 90s into early 2000s. So the WTO in 2001 would have opened up markets, and they invested significantly in getting into cities. So they were first to market in a lot of cities. So they pushed in right in that central and western China area way before anybody else did. So they were first to market, so they became the definer of what a food service, quick service experience is. Product and menu innovation suit the local consumers' needs. So they twisted their products in terms of, initially they were held back by the American head office in terms of the guys on the ground couldn't push on, they couldn't change the menu. The American head office said, no, we got our standard offering, that's what you're selling. Eventually, what they did was they took some Taiwanese managers and Chinese managers, brought into the business, give them a bit more free rein, and then they started freeing up the recipes and the menus and making it more Chinese. And then they pushed on with that, and that got the consumers coming in terms of liking the product and pricing the product correctly. Examples, if you're bringing a product to China and you want a bit of PR and create a bit of interest, how would you do it in terms of product innovation? If you can put green tea into your product, do it. Because it really grabs their attention. Häagen-Dazs green tea ice cream, Colgate green tea toothpaste. It's amazing the amount of things you'll come across in China that have green tea in it. Whiskey and green tea being the classic with Shavas Regal and Johnny Walker, pushing the Chinese market share. So things like that. Think about, and it doesn't have to be green tea, but that works particularly well. But if there's other kind of Chinese style ingredients that you can get into your product, keep your costs down, keep it nice, limited line. It's not your core volume, but it gets you a bit of PR, maybe a bit of traction with retailers and gets you on the shelf, and then you back that up with your core product maybe. So for a lot of that customer base, clearly in terms of the hotels and the retailers, you're effectively going through wholesalers as you would in other markets. So I've just thrown up here some examples of the types of wholesalers you might come across. So Synotis are possibly the best modeled business that I've come across in China as a wholesaler in terms of they're very much like what we'd expect in the UK, in Ireland and in Europe. Very professionally run outlet, good temperature control, good way of developing their brands and their customer base. But they've got extremely challenging credit requirements, trading requirements in terms of the credit they look for. I couldn't overstate how challenging it is, and I'm not going to say it because we're being recorded, but we have a good relationship with them. And they're the kind of company that we certainly can get access to in terms of people in the market to talk to and to get some feedback on product. They're also Synotis are very loyal to brands, very, very loyal to their suppliers. So unless a supplier really lets them down, they're not particularly interested in kind of challenging that position of that supplier or even bringing in a secondary supplier. So they're very nice. They're very good in terms of engaging, but actually to get them on in terms of business, there are some challenges there in terms of credit and in terms of brand and finding a gap within their range for yourself. Goodwill are a well-established operation, Chinese-owned, supplied the Olympics and the Asia Games, as did Synotis. They're primarily retail focused in the Shanghai region with some food service customers. And then in Beijing, they have a sister company called Mandarin Fine Foods, who are primarily food service focused with some retail customers. Anglis are owned by Bidvest, the owners of 3663 in the UK, and I know there's a business in Belgium, Holland that they have. Their operations in China seem to me to be quite regional. They have guys down in Shanghai covering that area, guys in Beijing covering that area, without it's not a national, there's no strategic connection or partnership between the Shanghai-Beijing business from my perspective. They seem to keep a low profile I don't hear customers talking about them a lot. I don't hear suppliers talking about them a lot. But I would caution against that, meaning that they're not in a good position in the market. There's many Irish food companies that have been very successful and kept a low profile, and it suits them very nicely, thank you very much. So where they seem to be strong, as far as I can gather, is in the bakery sector, and particularly on ingredients. So again, they may not be a fit for type of consumer products you'd be putting into retail or food service. And then you get the product category specialists. And this is, guys focus on dry food products, grocery products, guys focusing on dairy, and guys focus on seafood. These, again, don't tend to have the same profile or number of products on the shelf in retail as the likes of Synotis and Goodwill, who'd be quite strong in that area, particularly with the chains. But there are people who can take product in, they can get it on shelf somewhere for you, and they can maybe start moving a bit of volume. The challenge with these product category specialists is trying to figure out who's a decent partner to work with. That's because anybody you go to, they've all got connections, they've all got dealing with all the retailers, and you're trying to actually kind of get through that and get into some of the details of well, who exactly they're supplying, what kind of volumes, and how many stores. So the must-haves: financial due diligence, and I don't want to overstate it. I think in any market, even in the UK, if you're not getting credit insurance off a customer in the UK, you have them on pro forma or some very, very tight leash in terms of credit. And the same in China. If you can't get credit insurance on a customer in China, you want your cash in the bank. It ain't no sale until the cash is in the bank. And to be honest, how effective are you going to be chasing them in terms of if they're a couple of days late on payment or going on to a couple of weeks late in terms of payment? So you want the cash in the bank because you want your financial controller off your back, or the bank. I think the time to travel to market is another issue. Do you or colleagues or somebody in your business be able to commit to actually getting out to the market at some point in the year or twice a year? We participate at Cial Shanghai every May, and that's a nice opportunity to do it. We have a workshop and a trade reception, and then we bring customers to the stand. So put a pretty strong program for the guys that do come out. And at the time, buyers around exhibitions, so you get a chance to meet quite a few. So that's a good time to travel. Competitive pricing, of course. Buyers in China are extremely focused on them making obviously a turn on the product by selling it on. So, hey, can I sell the product and how much money can I make on it, like anybody in the world? But everybody is looking at China now. Everybody's knocking on the door. So you really need to keep the pencil sharp in terms of pricing. The import license, I suppose, in terms of the whole, you need a customer with an import license. So that may be the retailer, but to be honest, most of the retailers don't. So then they'll push it back down the chain to a wholesaler or then onto an importer. You need a long shelf life. So dairy products like yogurts, people are looking for as much as 6 to 8 months. Now, yogurts typically don't have shelf lives of maybe beyond 5 months. So that's quite a challenge. They will push for it. So it's a case of knowing the technical reasons why you can't deliver it and talking people through that and saying what can be delivered. And then ambient products, clearly you're talking about 12 months or more. Chinese buyers will always look for a market-leading brand. The whole kind of, I suppose, vibe around buying an imported product as a consumer is that it's aspirational. It's sending out a message about your status. You've been overseas or you've visited overseas or worked there. You know what's happening around the world. You understand what a good brand is. So the buyers always want it to be a leading brand. I suppose it's a case of how you position your product as a leading brand. You're a leading brand within a particular area in Ireland, or you're a leading brand because you're exporting into UK or Europe, etc. So what you tend to see as a result of that leading brand scenario is you'll see a lot of the big kind of multinational old brands on shelves. So it's a case of trying to figure out a way for your brand, how you can create it into a leading brand without being necessarily that multinational. So that can often focus within an Ireland scenario, and that's the way I would approach that. Options for product rejected by CIQ, who's the Customs and Import Control guys, or the customer. And it will happen, there's no doubt. If you're sending product to China, either customs or the customer will reject the product. And from your perspective, that could be a container or a pallet. And I've worked with people who've had that happen to them. And again, sometimes people say, oh, I'll take legal recourse. Really, what are you going to do? What legal recourse are you actually going to drive through and win on? within over a couple of pallets of product that's now being rejected in China. So think about that in advance. So one thing that some of the companies that deal in China usually have is a second option. So they've got contacts maybe on standby that if something happens to this product and it's not coming out, that if the customer is rejecting it, they've got another customer maybe to take it. Or if the CIQ are rejecting it, is there another market you can bring it to, or do you just have to bring it back home? So watch out for that. And the other thing to watch out for is Chinese food additives law. This is continuously being updated. It's actually quite difficult to keep on top of it. And it's all off the back of food safety law, which came out in 2009, which is off the back of the melamine crisis in 2008. And basically they have a list of food additives and ingredients that are allowed in products. And if you look at that list and you've got an ingredient or an additive that isn't on that list, then you're not allowed in. And it doesn't matter what Codex say or the WTO say or anybody says, if it's not on that Chinese list, it's not allowed in. Now you can start putting in applications to have it added onto the list, and goes through a process, takes time. So it's very important because people can and have got caught out by sending product in that's perfectly acceptable in the US or in Europe or Ireland, because if some ingredient that we have no issue with and the Chinese not that necessarily have an issue with, they just don't have it on the list, then it can get rejected. And they test samples of all containers coming in, particularly for a new product coming in. And then things to know about the Chinese market. So I mentioned about imported foods and gifting. One of the things I'm going to be doing shortly around that is the Chinese word for Ireland, the word is Ireland, and the word means love. So I think we've got something on that in terms of how do we package Ireland with gifting and link it into this whole love and kind of gifting to somebody you love. So I'm going to try and start using that on around chocolates and cookies and any other products. So bounce off a few slides to some retailers and see how they take up on that kind of with that concept. Like I mentioned, a lot of product churn for imported foods and retail. They will require promotional support such as food festivals. Watch out for your importers who are promising large volumes and they've got all the contacts, because everybody says that to you when you're out there, particularly the kind of importers who aren't distributors. So they're just bringing it in and selling on into wholesalers. That's very typical, and it's really a case of trying to get into the detail and ask very specific questions of the contact and see what to come back with. Do they start kind of getting a bit hazy, or do they kind of start losing a bit of interest? And I'd also caution over any kind of if it sounds too good to be true, I kind of use that as a rule of thumb. Just be careful on that in terms of especially unsolicited approaches. The other thing is, regardless of product getting rejected by CQ, it certainly will be delayed. So typically shipping out of Ireland, you'll hit port after about 8 weeks in Shanghai or Qingdao, and then you're looking at least 4 weeks to pull through customs, and possibly longer. So I suppose the solution to that, if there is one, is your importer customer, whoever is your invoicing, whoever is bringing it in and labeling it in China in the bonded area with labels, they need to be the guys with the contacts and relationships at CIQ at port level, at the local port that's been brought in, and they need to be the guys who are able to talk this through or deal with any issues that the local CIQ have. So a lot of it's about pushing the burden back on your customer in terms of that kind of support for your product. Temperature control in China is an issue. So if you've got chilled products, you should expect that summertime, or as product is distributed further inland or to outside, say Shanghai, into other cities, you will have issues with temperature control. And culture is a very, very important element of doing business in China. So how to handle the card and respect the culture, that's very, very important. But it should never be allowed to fog your commercial focus. And I've had people not only in China and other markets in Asia come to me, and you start asking some questions, and all of a sudden it's kind of culture this, culture that, and I'm going, well, that's all nice and fine, but I'm just asking you very straightforward, simple questions in terms of your business and where you see the potential for this supplier and how that product will work through their business. So we need to respect the culture, but we also need to respect the demands of making profit out of your business. So in terms of marketplace, basically it will depend on the product categories to a large extent. So we'll be looking at importers, so the guys who actually are experienced at bringing the product in. and it's a stepping stone in terms of entry into the market. But then clearly I'll want to be bringing in people like wholesalers and retailers and food service, because that can create the demand to help the importers, deliver business to the importers and bring the chain together. So, and there's my details, and I've added James's contacts up there as well, because he covers international markets. So if I'm not around or if I'm not getting back to you, which I'd admit happens, you can get on to him and he'll get on to me again. So I might, if I have time, I'm not sure how I'm doing time. Yeah, I might stick on the video if it's okay. It's an Instagram.